This is E2B, Energy to Business, a podcast by Opportune, where we bring you in-house expertise that serves all energy sectors. We examine emerging financial and technology trends and provide a broad perspective on ways to stay ahead, create opportunities, and execute market strategies.
Hello, everyone, and welcome to another episode of E2B, Energy to Business, an Opportune podcast. I'm your host, Daniel Litwin, the voice of B2B. And folks, thanks so much for joining us on another episode of the show. It's always good to be behind the mic with the Opportune squad as we continue to discuss major intersections of important industry trends, technologies, etc., with the larger energy, oil, and gas industry. Now, before we jump into the main point of conversation, I want to make sure that you're all caught up on previous Opportune content. So I'm going to hit y'all with the usual plug. Make sure you're going to our website, opportune.com, for not only more research and information on our solutions and services, but also other Opportune content, including episodes of the podcast, but also articles, blogs, videos, you name it. And you can also subscribe to E2B on Apple Podcasts and Spotify. So make sure you're hitting that subscribe button, and you'll have a full catalog of all of our previous detailed conversations, as well as notifications when we drop new episodes. So for today's topic, per usual, we're going to be exploring ESG once again. And this is a usual battleground for our podcast as we take ESG and often connect it with the larger energy and more specifically oil and gas industry. And so today we're going to be honing in on the E of ESG. And to do so, we're going to be focusing in on regenerative agriculture. You may be wondering, what connection does regenerative agriculture have with the energy or oil and gas industry? Well, we're going to get into the details, into the facts, and give you some actionable insights and strategies for how you can invest in or put regenerative agriculture to work for your business. So first up, let's get a quick definition. Regenerative agriculture is an alternative means of producing food, and its advocates claim that it has a lower or potentially even a net positive environmental and social impact. Regenerative agriculture has received significant attention from basically every player in the game today: producers, retailers, researchers, consumers as well, and as of more recently, politicians and even mainstream media. So let's get a little more detailed. Today with our podcast, we're going to dive into regenerative agriculture to explore and unpack the trend, but then also intersect it with ESG strategies and investments in our industry. So today we're joined by two guests to give us the lowdown. First up, I'd like to introduce a first-timer for the podcast, Mr. Rick Marriner. He's president and chief operating officer at Standard Soil, which is a company that's commercializing the various products of regenerative agriculture. Rick, great to have you on. How are you doing today?
I'm doing well. Thanks for having me.
Absolutely. Real pleasure getting to pick your brain on this and get a better sense for where regenerative agriculture is at today and also how it's applying to our industry. And then we're also rejoined by Patrick Long. He's a director at Opportune, and he's been on the show several times. Patrick, how are you doing today?
Great. It's wonderful to be here.
Yeah, always a pleasure getting to source you on the podcast as well and get your perspective on the intersections of all these various trends and technologies with ESG in our industry. So I want to first highlight a little background from both of y'all so our audience gets a refresher on the perspectives you're going to be offering.
Yeah, happy to. Carbon sequestration was the entry into Standard Soil. That was this idea that we could, from the oil industry, complete the carbon cycle. You know, there's lots of different cycles in our ecosystem, and one of them is carbon. It off gases from certain functions, and then plants and soils bring it back down again in a natural cycle. So Standard Soil, as we'll get into a little bit later, was one of the ways that we could commercialize the carbon cycle and put some of the stuff that's in the atmosphere causing some trouble back to where it could do some good work for us. That's how we formed a team back in 2013, 14, 15 to think about this. And even today, as we seek out ways to turn carbon sequestration as one of our, outputs of regenerative agriculture into commercial products, we're finding lots of other commercial products. And so Standard Soil is expanding and growing as we even as we speak.
Well, thank you for tracing that for our audience. Patrick, let's jump over to you now. And we've covered your background on the podcast before, but I just want to refresh it. So your focus over the years has been on supply chain issues, specifically in the downstream energy space. How does that intersection land you at ESG? And as you trace that sort of career landing point, also talk to us a bit about how you see ESG playing an active role in the industry today.
Yeah, you may wonder why someone who's been working with process and technology kind of found, and we now find ourselves talking about regenerative agriculture. It comes down to supply chain and trends and staying current and relevant. That is important. And as the pandemic has so outlined, supply chains have evolved tremendously over the last years. And so one of the key ingredients that's intersected with supply chains, my area of focus, has been around ESG, with a huge emphasis on the environment and making sure that we truly understand and are cognizant of the carbon footprint that is out there. And then it's great to find companies that are very innovative, like the one that Rick is working with, that are actually doing something about it to create net positive benefits, right? Overall, there's several different push and pull factors, right? And there's not just one, and it's kind of this collective snowball that as the year kicked off, it maybe started with investors making statements saying that investment was going to be almost entirely focused on companies that were specializing in sustainable energy. You then have some governmental policy leading the way, and then there are consumers that are demanding and getting more intelligent and demanding more and more from companies to take care of the earth and making sure that as products are produced, that companies are cognizant of what is going on.
And I think in that need to stay competitive, what we see is the ESG playbook necessarily having to expand, and therefore there need to be more unique and creative and materially consequential investments and choices in this ESG portfolio, because hitting on the easiest ESG wins no longer make you competitive, right? Just having an ESG strategy isn't really the competitive edge anymore. It's having one that is leading the pack. And that lands us now at regenerative agriculture, which I think we can call for this industry a unique and one that has a very high ceiling type of investment. There are a lot of benefits that come from investing in and utilizing regenerative agriculture in the industry. So I want to identify those intersections and why we are seeing such benefits. So Rick, I'm going to toss it back over your way. But can you just further expand on regenerative agriculture as a concept? How is the philosophy and the practice of regenerative agriculture different than what we might see on a traditional, either family-owned farm or more sort of factory farm, right?
Yeah, happy to. So, it's a tough term to define. If you ask 4 people, you'll get 5 definitions, but it is a broad category that includes some really excellent new work, things like low-till or no-till seed drilling for row croppers, the introduction of prairie strips, things to look up here that make sense for folks that are in the conventional commoditized business, but doing a little bit better. But our focus is actually not one of the new regenerative agriculture. It's actually going back. I call it stepping back to go forward. And our focus is mostly right now on ranching. The real definition for ranching is allowing healthy animals to range in very specific ways that evolved with the grasses that they feed on. So if we have to go back only a few hundred years to find that roving mobs of bison moved from east to west, north to south in these huge herds under the pressure of predators like wolves and bobcats. But then we as humans, we started to cut up the country. We put in fences and roads and freeways and subdivisions and strip centers, and those bison are long gone. But the grasses have evolved over millennia, and they don't really mind the fact that we're 200 years changed. They still want to be grazed. And so this step back to go forward is recreating on the ranch land predatory pressures using really fine wires that have a little voltage that train the animals to stay bunched together, and then a a rancher once a day or once a week moves these cows that are all bunched together like they had been and involved with the grasses around the pasture. So if you can hear it, adaptive multi-paddock grazing or mob grazing or paddock grazing. What it does, though, is it lets the grass get munched once, not so badly that it gets down into the dirt and the roots, and not so selectively that certain grasses die, but as they had evolved. And then really that magic happens when the mob moves on, when the cattle move to the next pasture, because the manure and the urine and the hoof prints and the chopped grasses pulse. Right, they get a new surge of life. Suddenly, carbon dioxide needs to be sucked down from the atmosphere into these new green, lush grasses. The insects, especially the beetles that come in and scrape up the manure and spread it around and put it under the ground. And lo and behold, you go in after a few days or weeks, or in some cases, very dry climates, many months, and that land has rebounded, has been regenerated. And you can dig down. You take a spade, a shovel, and dig down a foot or two. You can see the layers of black carbon-rich soil starting to accrete. And that's what we're doing. That's what I would say the regenerative agriculture looks different than the current. And that's our specific focus right now is on the ranching side.
Now connect the dots with Standard Soil. Then, how did that philosophy for regenerative agriculture motivate a company like Standard Soil to now enter this space and see it as one ripe for opportunity for commercialized and scaled products?
Well, it actually goes back to 2 of the 5 of the initial movers, investors, and founders came from the oil industry. So our current CEO, Russ Conzer, and I were both at Shell Oil Company back at the time. And there was a project called Project Meadowlark where Shell thought that with nature-based solutions, we could, harness ecosystem services to provide some of the cleanup, right, of the carbon that we see in the atmosphere. And so over the course of about 18 months, they funded and staffed a project with Russ and I and a couple others to go around and talk to various policymakers and academics to see what is the latest and greatest work being done in nature-based solutions. And Standard Soil, once we were able to take this public information out and move it into a business, was one of those business plans that said, for the consumers to find what they want in the marketplace, we're going to have to be more creative than just the commodity business. And so Standard Soil was put in place to find what was the pathway to consumers. And really, over the last couple of years, we've experimented with a few different pathways. And here we are in 2022 with, I think, 2 pretty solid and growing pathways where we can move consumer dollars, folks that want to make purchases in the market for regenerative agriculture, back to the ranchers that are making the actual activity. So again, it's the background in trading makes sense because suddenly there's an arbitrage between what the consumers want and what they can find in the marketplace. And so enter Standard Soil to close that gap and bring it to market.
And that's so curious to see a company as large as Shell invest in a regenerative agriculture initiative in 2013, which is actually kind of early for the larger ESG shift I think we've seen over the last 10 years.
Well, I'm not as surprised, maybe because I was part of Shell for so long. But if we look back at 2013, 2014, that was the transition from CEO Peter Bozer over to Ben Van Beurden in 2014. And I think there was a real and legitimate concern that the consumers were speaking up and they wanted to see in the marketplace solutions to these problems that they were just then beginning to kind of really dig into in the marketplace. And carbon sequestration was one of the molecules, one of the problems that we're trying to solve. It turns out once we dug into it, though, that nature-based solutions are way beyond just carbon sequestration. It moves into cleaning up water supplies, preventing runoff into rivers, increasing the biodiversity of lands. So it uncovered a treasure of nature-based solutions long before ESG was a walking around word that we used. Nature-based solutions will be an important part of, I think, a lot of oil companies' plays going forward. So,
Patrick, I want to have you weigh in here as well. What are you seeing in the industry today with how oil companies and gas companies are approaching nature-based solutions?
Yeah, I'd like to echo, what Rick said. I think that's great. There are companies like Shell, which took the bull by the horns and started this before it became trendy and kind of a hot topic. Those would be absolutely commended. But it's about, if you think about it from a commercial aspect, it's about a diversification of your portfolio, right? And so companies are, in addition to being concerned about the environment where their employees are working, where their customers are living, and wanting to make sure that those are regenerative, and we're doing whatever we can to help protect waterways and all of the fragile ecosystem that's out there. There is an aspect to making sure that we're diversified, right? So there are a lot of companies that are entering the market for various reasons in order to supply and fulfill the demand that's out there. And so it's nice. I mentioned several push and pull factors. It's nice that it's a mixture of all of these different factors.
I also want to highlight some of the operational needs that go into making regenerative agriculture an actually viable investment in this industry. So, Rick, I'm wondering if you can expand on that for us. Can you talk a bit about the role of ranch certifications in this space and how third parties, and specifically third-party audits, play a role in validating regenerative agriculture as a viable investment in the industry?
Let me break up the answer into two parts and first say that for those regulatory, or what we might say an involuntary market where action must be taken, we think of the EU, we think of California, there are specific protocols and there are specific runways to get those protocols approved. And soil carbon sequestration and those other ecosystem services that nature-based solutions give us are on the road to being approved in those protocols. Good friends of the company and our network are working regularly to get those protocols supported. And there's pressure on the political side to include soil carbon sequestration for soil health for any country. But there's both advocates and there's folks that will argue it. And quite frankly, I like to see the healthy debate early because it allows the science to lead and the data to lead. The results in these first ranchers that have been moving their land into regenerative agriculture are visually and observationally positive. You want to be on these pieces of property that have turned the corner and are bringing back biodiversity and animals and health. But let me talk then about what is it to be certified today in the voluntary markets. When we want to go to the marketplace, though, we need something that's even more, I guess, unassailable than simple science. So we went looking to see who in the current group of respected names could independently certify what we're doing. And we were very happy to find in 2017, the Audubon Society, again, a high reputation organization, had created a not to pay to play. So this is you can't pay them to get the certification. You actually have to do the behaviors, make the changes, and then essentially be audited to show that you're doing these regenerative agricultures. And their entry into this is birdland habitat. You can't fake it with birds. You can stock a pond full of trout. They can't go anywhere. But if you stock a land with a bunch of birds, they're going to fly. They're going to go to where the land is healthy, where they can find the insects and the nesting and the diversity they need to be able to live. And so the conservation ranching program that Audubon put out was already ready in place for us and has been growing year on year. The good folks at Audubon, again, they're independent from Standard Soil. They're independent from the ranchers. They are focused on the American flyway, so really from Mississippi up through the Dakotas up into the Canadian prairie. But there's ample rangeland in there for us to work with ranchers and then move cattle from those ranches into the consumer. So they're a great partner. We look forward to growing with them. And I think they give a clear and unassailable reputational stamp of approval on this work that the ranchers are doing. They're not the only ones out there, but they're the ones that we're working with now.
And so are you finding that meeting those metrics is difficult today? Are there challenges that ranchers and farmers, both family farmers and larger kind of corporate factory farmers, are facing as they implement regenerative agriculture? Yes, no, and what have you seen as some of the strategies for overcoming any of those challenges?
So yes, there are challenges, but there are challenges associated with any change, especially when you're changing away from something that was pretty ubiquitous, relatively cheap for certain definitions of cheap, and easy. But the analogy is akin to: are you training to be a sprinter in a running race, or are you training to be a marathoner in a very long race? If you wanted to be a sprinter, the current chemical cocktails you can pour on your land and practices you can use can fast forward the production of that land for a certain period of time. But just like a sprinter, after 100 yards, you're going to need different things. So these ranchers that have moved into a different mindset that said, we want this land to be intergenerationally valuable to our family or to our shareholders. And so what do we have to do differently to run this marathon that we call regenerative agriculture? We're going to reduce inputs. We're going to understand the water cycle better. We're going to make sure that the animals are mobbed and kept in an evolutionary sync with the grasses. There are some ranchers that were already doing this and then came in and got the seal of approval. Obviously, no big change for them. Some ranchers came to this really either because the land broke and no matter how much they sprayed on it, it wouldn't work anymore, or there's been a generational shift where one generation who held certain things to be true has moved on, has retired from the field, and the new generation comes in and says, wow, this is hard. I want it to be easier, and I want it to be easier so that my kids want to be here as well. And corporations will come to it, and I think the incentives in the commercial space are there to be watched. Big corporations are watching what the small ranchers are doing, and this is regenerative agriculture is about growing intergenerational wealth of our prairie and ranch lands for all of us. And so I worry about, again, this pressure to fast forward something that actually takes a little bit of time. Not a lot of time, but a little bit of time. So to answer your question, it is yes, but it's not impossible.
All right, Patrick, I want to toss it over to you to kick off a more focused ESG conversation here. So what role would you say regenerative agriculture is playing in some of the larger ecosystem of ESG portfolios that we see today, right? What strategies are you seeing oil and gas companies use to properly validate these investments, not only to shareholders, but also to the growing role of outside stakeholders like customers and also other internal stakeholders like employees, right?
That's a great question. There's a lot there to unpack. The SEC came out with a ruling, about 510 pages, on March 21st of this year. And so that ruling focuses on making sure that companies disclose in their annual reports and prospectuses, along with audited financial statements, what they have in terms of a quantitative disclosure on the greenhouse gas emissions that they have. And so that's broken down into 3 different categories: scope 1, 2, and 3. And so companies are having to look at this. They're being audited. And so I think one of the big words here, in answer to your question, is around visibility and transparency, right, as a theme, and something that I'm seeing. And so what is important is to, you can't change behavior unless you start measuring it and making it more transparent. And so disclosure and having it be an SEC disclosure is a good first kind of kick in the right direction, right, for companies. But then it's really tackling and embracing this. And then to your point, as you were talking about consumers, how do we get consumers to buy in? And so it's making sure that the visibility is there. There's a digital backbone so that we can consistently measure the carbon intensity that is there. And then companies can work towards calculating what their offsets need to be so that you can then continue to broadcast and advertise that out and remain competitive and draw in consumers, because consumers, as you mentioned, are getting more sophisticated and they are wanting to participate and be with companies that are taking a very active role in this space.
And I'll open this up to both of y'all. What role do you see the larger digital transformation that we're seeing in the oil and gas and energy industry play in validating and supporting investments into regenerative agriculture in an ESG portfolio, right? And, as we bring up digital transformation too, it's not like this is a new trend either. The industry has been digitally transforming now for, you could say a decade, 2 decades, right? But if we look at even just the most recent slice of investments into machine learning, into more IoT technologies, and just rethinking the suite of software tools that support the analysis, ingesting, and use of these various data touch points, I feel like there is, a fresh battleground that we need to hash out and connect the dots on here. So again, what role are y'all seeing digital transformation play in supporting regenerative agriculture as a tool in a larger ESG portfolio?
I could tee that up from a consumer and a wholesale front. And then, Patrick, you got to hit that one home for me, because behind the scenes on what's driving these behaviors is still curious to me. On the consumer front, Standard Soil has 2 brands in the market, and we think we'll always have a retail-facing brand so that we can get real visceral feedback from customers that are engaging with our products. But on the wholesale front, that's where we see the digital transformation really coming home. We sell a white label grade into producers that want to then upgrade it to other sausages and meatballs and cuts. And it's in that white label volume where the question comes around the life cycle analysis. And these buyers recognize it doesn't exist today. What I'm talking about is almost like a blockchain for cattle, which says from these genetics to this calf-cow operation to this ranch to this truck to your grocery store to your home, we know where this cow has been, and we know that it has been handled holistically and with regenerative agriculture, and we can attest to that. Beyond affidavits, into real data, RFID, ear tags, you name it. It's a huge dream. In certain parts of the world that exists, but more out of a sense of food safety. It didn't take very much for the UK to come around to tracking every molecule of beef when they had their illness hit them a few years back. I think it doesn't take a crisis to want this, though. And I think consumers, at least through these white label negotiations, are asking for it. And they understand it's going to take time. And there's some great companies that are coming together to offer this kind of blockchain tracking from genetics all the way through to storefront. But Patrick, how do you see what's forming these? What ESG topics are forming these demands at the wholesale level that we're seeing?
Yeah, those are some really fantastic examples for it. And I would say, from my standpoint, where I see digital transformation, so Rick, absolutely. So it's in support of providing customers with that feedback so that they can connect the dots and see which companies are and are not performing, right? There is a concern of greenwashing, but when you increase the overall transparency and visibility and make it something that's core to your business, then the fact that digital transformation is just enabling you to tell the story and get it out there to more people, to make it so that you can have that independent third-party verification status that I think is so critical and important, because consumers can't verify every single solitary cow. But what they can do is they can read up and understand about the Audubon Society and their program, and then understand which ranches are included, and then how the cows and the beef are being used within Standard Soil, right, to get product to market. I think another area, Rick, that you were talking about, and kind of a sort of a backbone is, let's face it, ESG is also a bit of a burden. And so there is a lot more tracking and managing of data points. If we think that, Daniel, you mentioned the IoT. I mean, if you think if there are data points inside of like a traditional refinery or a terminal or a logistic network, it has exploded and it's less certain. And I don't think everyone's kind of honed in on exactly what and where to measure, right? And so it takes an awful lot to collect this information, collate it, bring it together in central databases, be able to measure and track and trend and benchmark and all those things that you need to do, and then report on it, and then figure out how do we continue to manage it. And so the digital transformation is bringing and connecting this Internet of Things, right? All of these different devices and scientific measures together and then making it visible for SEC reporting, for internal executives as well to improve the overall business, right? And for consumers. It's all of that coming together.
All right, Rick, Patrick, I feel like we've done a good job of detailing the high-level reasoning behind regenerative agriculture investments in the industry and how they intersect with this larger push for, an ESG-focused strategy from oil and gas companies. What I want to do now is peer into the crystal ball a little bit. We like to do this a lot on the show, but we're going to speculate a bit, try to look ahead and pull from not only some of the paths that Standard, Soil, and Opportune have laid for themselves over the next 3 to 5 years, but also try to analyze where the industry's headed to map out some actionable insights for our audience. What do y'all think?
I can tackle that first and take it in two parts. We'll tackle the regenerative agricultural front. It is everywhere in the news right now. It's not hard to find both small and large organizations looking and experimenting with this. If you turn on the feed and look for regenerative agriculture, you see quite a bit of competition. And as an advocate for the capitalist model, I think that competition is good and welcome. First movers may have an advantage, but they've got to stay efficient and they've got to stay true to the principles that we want to make this intergenerational value grow, and do so in ways that we talked about today that are both auditable and true. So next 3 to 5 years, I think we see the investment grow in this space. And I'm encouraged by the number of phone calls, both from customers and partners that want to help us solve the capitalist solution that is moving value from what the consumers want into the hands of those that can give it to them, with or without policy, with or without regulation. Where the voters believe it needs to be regulated, that's the will of the voters. Where it's not yet regulated, I don't think we need to wait. We can move boards and investors into the arms of the consumers in ways that are repeatable and profitable. As for Standard Soil, I am, and my partners may disagree. I do welcome competition because I think it keeps everybody sharp and keeps everybody driving towards efficiency within these well-defined practices. But I'm also marketing agnostic. We've had a few starts and stops. I think our beef box business has had to take a step back to be able to deliver our mission effectively. But our stack business is at an inflection point that we're very excited about. Our white label business, where we bring these holistic regenerative products to other brands that want to make that label claim with high confidence. These are the partnerships that'll help us grow over the next 3 to 5 years. So it's an exciting time. I'm glad I'm part of this organization now, and with other partners in the business like Opportune. I think the pipeline to drive people towards solutions is only going to speed up the pace. How do you see it, Patrick?
Yeah, the next 3 to 5 years, I was reflecting on a couple of things that you were saying. One that really stuck out to me is the genuineness of where Standard Soil is and the balance where they've entered, and they've entered in a very thoughtful way and have a very strong strategy. I think the next 3 to 5 years are going to have companies that are going to be more focused like Standard Soil, and what's going to happen are the ones that are merely trying to do some greenwashing are going to fall a bit by the wayside. And so there's going to be a shakeout. I think there is a bump. There's an excitement. There's some concern about how to meet different regulations. There will be investment funds, and you will have to have a certain percentage of the portfolio to be focused on ESG and have to prove that constantly. And there will be measures. And when banks are loaning funds, there will be, much like you have to meet certain ratios around working capital, I am sure that we will get to a spot where there will be ESG ratios. You will be forced to measure and manage and maintain those or face certain penalties. And so the result is the consumers are going to continue to get more sophisticated. And so it is an encouraging, and it sometimes feels daunting that there's so much work to be done. But I think we are going to start to see a convergence, right, as we have all of this energy and excitement that is building, and will then start to plateau out. And then innovation will continue to push us along.
And I think we'll wrap up on that note. I think there's a lot to be optimistic for. The work that both of y'all are doing to innovate and support regenerative agriculture as a viable investment in your own ways and spheres, I think will play an important role. Hopefully this podcast too is educating folks on the opportunities that are out there in investing and putting to work these kinds of practices and philosophies for transforming our industry. And we'll end on the warning as well, right? Don't just invest in greenwashing strategies, ones that will maybe play a nice PR role in the short term, but that aren't part of a focused investment strategy that has a larger vision for not only how to implement it, but how to make sure that an investment into something like regenerative agriculture actually pays off. So hopefully some of the strategies we learned today from Rick and Patrick will make that path a little clearer for our audience. And I'm sure we'll continue to explore more ESG strategies, including how regenerative agriculture is playing an outsized role in the future on the show. But till then, we'll go ahead and wrap things up. Thank you again to our two guests. First up, we were joined by Rick Marriner, President and Chief Operating Officer of Standard Soil. We were also joined by Patrick Long, Director at Opportune. Rick, if folks want to learn more about Standard Soil, they want to tap into some of the work that you're doing in this space, or maybe even just ask you some questions on where to start with investing in their own regenerative agriculture strategy, how can they get in touch? How can they learn more about what y'all do?
Well, I'd push them towards our brand, BlueNestBeef.com. It's a good landing page for our blogs, our partnerships, our science, and it's also our marketplace where you can find box beef where we deliver it, and then our Bobo links, our snack foods. But BlueNestBeef.com, it'll connect you to any of the founders as well. We look forward to the conversation. Thank you.
And then Patrick, same question to you. If folks want to tap into some of the supportive work that Opportune is doing in helping guide investments into things like regenerative agriculture as part of an ESG portfolio, or really just any other questions they might have on how to even approach this topic, how can they get in touch with you? How can they learn more?
Yeah, absolutely. Thanks. Probably the best way is to go out to opportune.com. Our firm is diversified in the types of services that it offers across the energy industry, and each one of those services is absolutely evolving and keeping pace as the industry is moving as well. And so we've only talked about one small aspect here, but please visit opportune.com, and then you can also find us on LinkedIn and our thought leadership out there. Thank you.
Fantastic. All right, y'all, this has been great. Thank you so much to the two of you, Rick, Patrick. We'll chat again soon. And thank you, everyone, for tuning in to another episode of E2B, Energy to Business, an Opportune podcast. If you like what you heard today and you want previous episodes, or you want to make sure you don't miss out on future conversations and insightful discussions like this one, make sure that you're heading to our website, opportune.com, and subscribing to E2B on Apple Podcasts and Spotify. I'm your host, Daniel Litwin, the voice of B2B, and we'll catch you on the next episode of E2B.